welcome to this lesson. As you can see, we are doing ledgers and the trial balance. Okay, so this video we are just doing an introduction to ledgers. So what is a ledger? A ledger, it is a principal book of accounts. It is just a book, right? Now this book we have there. It contains the details, the personal details, the personal accounts of our creditors, our debtors, okay, our expenses, or everything. It is used to track the records of an organization. And you know there are a lot of ledgers, okay? You have got the purchases ledger, the creditors ledger, okay? The purchases ledger and the creditors ledger, they're just one and the same. You've got the sales ledger, also called the debtors ledger. You've got the general ledger. The cash book is also classified to be a ledger. Okay, so a ledger, it's a book where the double entry, okay, the bookkeeping is what is done. Okay, so we cannot do ledgers without applying the what, the double entry. So we have to know what the double entry is. Okay, the double entry system, also called the dual aspect. Dual, like this. Okay, dual aspect. Okay, this states that for every debit entry, okay, for every what debit entry, there is a corresponding what credit. Okay, so which means a transaction has two effects. Okay, for each transaction, there are two accounts. The one that is debiting and the one that is what crediting. Okay, so there is this you used to let's say to learn in grade 9, debit the receiver, credit the giver. So we will be debiting the account that is increasing, the account that is receiving. Then we credit the account that is giving out or that is decreasing. Okay, so here is a guide that will help us. It's more like a table. Okay, let me write like this. So this table is going to what to guide us. So that is if there is an increase, okay, and this is if there is a what, a decrease. I won't finish. Okay, so let's say here we have got assets. Okay, so assets, okay, let's say I've got liabilities, okay, let's say I've got expenses, okay, we have gains, okay, let's have capital. Okay, so if our assets are what increasing, okay, if our assets does what increase, what are we going to do? We're going to debit the assets account. If assets decrease, we are going to do what? To credit the assets what account. Okay, if liabilities are increasing, we are going to do what? To credit them. If they are decreasing, we are going to debit. Okay, for expenses, if expenses are increasing, which means they are receiving, we are going to do what? To debit the expense account. And if they decrease, we are going to credit the expense account. The gains are also called the what? The incomes, guys. This is income, the amount you are receiving, such as sales, revenue, discount received. If the gains are increasing, you're going to credit them. And if they are decreasing, you're going to do what? Debit. Okay. For capital, if capital increases, there is additional capital. You have to credit the capital account. And capital decreases, there was a withdrawal of capital. You have to what? Debit. So the rule, okay, or for every debit entry, there has to be a corresponding credit. Okay. Yeah. So what is the relationship between ledgers and a trial balance? Okay, so you cannot prepare a trial balance if you haven't prepared the ledger. Okay, ledgers show a summary of transactions. They summarize all the transactions, okay, in a book. Then after we summarize those transactions, after we post them to the ledger, we are going to extract a trial balance. So a trial balance is there to what? To prove the arithmetic accuracy of the ledger. The accuracy, if it also checks if the double entry system was done correctly. If we did the double entry system correctly, we recorded well, then the trial balance has to what? Agree. It has to balance the debit and the credit entry. So at the end of our ledgers, we are going to balance off the accounts. After balancing off the accounts, we take those balances, we transfer them to the what? To the trial balance. Okay? Yeah. Then we extract the what? The trial balance. Okay. Hope we have understood the ledgers. Okay. So now let me give you a step-by-step process on how to post transactions to the what? To the ledger. So guys, here are the steps. There are just 4 steps you're going to use. Step 1, identify the 2 accounts being affected. Okay, according to the double entry system, LU, okay, or the dual aspect, for every transaction, at least 2 accounts are going to be affected. So identify the accounts. For example, sold goods on credit, okay, to James Speedy. So there is the sales account and the debtors account, James Speedy's account. So you identify, oh, so one account 1, okay, and the other account 2, okay. So step 2, but you're going to be fast, You know this process is the way they are. You just identify, you read the question, you have already identified the accounts, 2 of them. Now, except that there are some questions, I'm going to make a video on that, whereby you have got, in one sentence, there are 2 sentences. Like in one sentence, they have combined, okay, yeah. For example, started business with cash 100 kwacha and bank 300. You can, so there is the cash account and the capital account. Again, the bank account and the capital account. So they have combined the sentences. But you all in all, you have to identify the 2 accounts being affected per transaction. So use the double entry to analyze the account increasing and the account decreasing. Okay, one account decreasing. So the account which is receiving, you're going to record, oh, the account which is increasing is this one, the account which is decreasing is this one. Sometimes both accounts will increase. For example, sold goods on cash. Okay, sales account is increasing, the cash account is also increasing because cash is coming in. But all in all, you must have one which is being debited, the other one which is being credited. So according to the double entry rule, it says for every debit entry, okay, there is a corresponding what? Credit entry. Make adjustments. Just step 3. So there are some transactions that do not have what? Adjustments. Some they do have. For example, you have got discounts. Okay, you have to reflect the actual amount you're going to pay. Let's say you have sold that 100 kwacha and you have got a discount of 50 kwacha. Let's say you pay by cash. Cash has to reflect that you are losing out 50 kwacha, not the 100 kwacha. So discount. Okay, yeah, and other adjustments. They can make adjustments to these ledgers. Okay, the step 4, record in the respective ledger accounts. So you have to record after this one is debiting, this one is crediting. Now create 2 accounts. Okay, the one for the account which is receiving and the one for the account which is what? Decreasing. So this side, okay, these are accounts. Okay, this also you say maybe J account, just like that. So if J account was a debt and they receives 100 kwacha, okay, you have something like this. So they carried it down, the balance carried down will be 100. Okay, I'm not writing okay, but you know how we do this thing, right? Let's say I've got 100 again, 100. So from this account, if you close it up, you're going to have a balance carried down. In the same way with this account, you're going to balance it. You balance it. After you balance the same figure, let's say if the balance was here, the carried down balance here, the brought down balance will be here. Okay, if the carried down balance here, the brought down balance will be what? Here. Okay, yeah. So these are what? T accounts. After we get those balances, the balance brought down. It is this balance we are going to take directly to the what? to the trial balance. Okay, from there we can extract our trial balance. If our double entry was okay, the account has to what? To balance. So that was just the introduction to ledger account. Goodbye, guys.